New year, new investments. Today we're gonna go through over my whole portfolio and I'm gonna give my predictions for the year 2026 and I'm gonna give you some insight into my holdings and why I own what I own. First I wanna say you shouldn't blindly copy my positions or anyone else's because you don't know when I'm gonna sell. There's a lot of reasons why I hold what I hold and maybe not and right now might not be the best time to buy into the positions even though I'm holding them. But yeah, let's start off with my biggest position, my biggest stock position, which is going to be Alphabet. If you know, you know, in 2025 Alphabet had a great year for the stock price, and so did I. I bought it really early for 155 euros. I bought 21 shares and it's now up to 329. So I'm really happy about it. But I'm still holding. I haven't sold it yet. Mainly that is because of tax. I don't want to pay that much tax and I'd rather hold it in the long term and pay less tax. In Finland you pay less tax if you hold longer. And I still think that Alphabet is a really great company. Right now it's starting to be at the kind of price that I wouldn't maybe pay for it. But even still with a PE of 32, it's manageable for a tech company. I think Alphabet has a lot of advantages compared to other tech companies. Of course, YouTube, where you're watching this video on, is most of the internet. And I don't see that changing anytime soon. Gmail, Google Drive, Google in itself, all these are things that almost everyone that I know uses. You cannot be on the computer and not use Google. It's so big. And I've liked a lot that they have done recently with the AI. Like, I love it when you go to Google and there's just like the AI mode available right there. It's so good. You just, everything that I want to know, I always just ask Google and then I go into the AI mode. I don't really even open up ChatGPT that often. So I think in the AI sense, Google is winning. In the video sharing sense, Google is winning. And also, like, Alphabet has a lot of other ventures as well, like Waymo. The Tesla stock price is so high because they have like these vague, really vague promises of self-driving cars. But Alphabet has Waymo, which is right now, I think, one of the only companies that actually does like full driving cabs in the world. So there's some potential in that as well. This price, a bit too high, but I think it's a great company if you want to buy it for the long term right now. Then I have Aker ASA, which is a Norwegian company. It owns Aker BP, which is an oil company, but it also owns a lot more. It's another one of those companies that I would not maybe buy at this price point right now, but when I bought it, it was at a really good price. It's a well-diversified companies. It has companies in real estate, in fishing, in oil, of course, in machinery. It has some AI companies. It also owns some Bitcoin. But all of this was for under 1 PB, which means you were getting a lot of it for free. But right now it's at 1.28, so I would not maybe buy it right now. But if it goes under 1, you should maybe buy it. It's not a recommendation, but I would buy it. Then we have Berkshire Hathaway, a classic. Y'all know it. It's fine. You know, I would maybe not buy now with Buffett retiring. It hasn't done that good for me either, but it's fine maybe. Then Crocs. I own actually quite a bit of Crocs stock. I think it's kind of like a cyclical play. It's a good company with a really good brand. I think the product is great. For me, when I'm investing, the most important thing is the product. The product has to be great. The product has to be something that I would be willing to pay for. And Crocs is one of those companies. Maybe the problem with Crocs is a lot of people have shoes like these. There's a lot of counterfeits and like similar products that are a lot cheaper. There's a lot of competition in the space with like now foam sneakers like Yeezys, and you know, you can buy like these slip-ons from Temu for like 2 euros. So there might be some challenges, but I do think that the Crocs brand in itself is really good. The products are really good, and often the knockoff Crocs, for example, are not up to par with the quality of. So I do think that in the long term, Crocs will do great. It's hard to tell if it will be in 2026 or later down the line, but I do see some potential here. As you can see, the share price has been quite high at 160 and 180. Now it's at 86. The PE is quite high at 28. The PE is so high because of a loss here in second quarter of 2025. And if you look on the yearly, it's been quite good. And if you can get a company that has even like 9 USD revenue for the year per share, and it costs under 90 euros for a American company, it's quite a good price. Then we have Investor AB. It's another diversification play. Then you have Pioneer Property Group, which is another diversification play. I guess it's a real estate company. I'm not sure if it's a rate, but it's something really, really close to that at least. It has a really good dividend of 10%. It pays quarterly, and it has had really stable dividends and returns. I would recommend buying this at under 100 now. Svenska Handelsbanken is quite an interesting company. It has quite a big dividend, and it gives it out once a year. So last year I saw quite a big pattern here where you can see that the stock price goes up before the dividend, and after the dividend it goes down. But the thing here is that it goes up and down way more than the dividend actually is. So I remember I bought it like here at like 95 or something like that, and it's up to 136. So it's done quite well. So I would maybe recommend waiting a couple of months for the next dividend and buying it then. Of course, I'm gonna be keeping this for the good dividend. I think it's a good company. You know, banks in general are quite easy to evaluate. If they have customers, if they have their own capital, they're pretty good. Then we have probably, I think maybe my most interesting stock, which is going to be Vend Marketplaces. If you don't know what Vend is, it's a re-commerce company that used to be called Schibsted Marketplaces, and before that Schibsted. They own Blocket, Finno, they own Tori.fi, Oikotie, Autovex, Netbil, maybe. There's a lot of those. So basically, they're a e-commerce company in the Nordics. They own sites like eBay, Craigslist, and used car sites, and sites for buying homes. And I use their services a lot. I live in Finland. I use Tori.fi a lot. I buy and sell things there every day. I make a lot of money through there. And to be honest, they have improved the service so much that I just love it. Whenever I see a company implementing AI and improving their services as much as they have, you know, I can't get my fingers away from investing to them. So I did. Basically, they have features where you can take a picture of any object and it automatically detects the brand of it, what it is, so it automatically categorizes it. It automatically writes your e-commerce like post title, the description of the product. So it makes it really fast to post products. Also, they have done like a service where it's actually easier to ship out products than to pick products when you're buying on the used marketplace. And for sellers, it's so easy to ship out things. Like, you know, I remember beforehand I never would ship out anything that I was selling because just a hassle and there was risk. But with their service, it's cheap, it's easy, and it's good. And the best thing for us investors is that they are making a cut when they didn't before. The ratios are not the best ever. 34 PE, 2.4 PB or MRQ, but they have done pretty well in the past. The numbers are pretty hard to evaluate with this company because they have had gone through a lot of changes recently. First off, they used to be Schibsted Media, which owned like newspapers in Norway, but then they got away those, they sold those. Then it used to be Schibsted Marketplaces, and then they had like Adevinta, which made these kinds of sites in, I think, Spanish, and in Spanish country? Spain. But they have sold most of it to a private equity firm. But they do have still some of the Adevinta, and they get a lot of revenues from there. So, you know, sometimes the revenue is going to be really, really high when they get some revenues from there. And then other months it's going to be really low, like we can see here. It's really hard to say what the revenue is going to be in the future for this company, but I really do believe in the company and the products. They have evolved so much for the better recently that I believe that they can make it. Then you have VF Corp. They own Vans, they own North Face, they own Timberland. They have gone through quite a bit of a rough patch. As you can see, the stock price has fallen a lot from around 90. USD to 20. I bought it for like maybe 13 or something like that. You know, they have a new CEO. God, I don't remember his name, but they have a really good new CEO. And you know, I think the numbers for this company speak for themselves. It's not maybe the best when you look at it straight up like a P of 88. It's not that good, but the MRQ is quite fine. And if we look at the last quarter's revenue, it actually looks pretty good. It was 48 USD, and if you think about if that were for every quarter, it could be like 2 USD, and you know, it would be a P of 10. Of course, this all is speculation, but I do believe in the brands with this company as well. You know, North Face, Vans, Timberland are all brands that are popular, and I think will remain popular in the future as well. Then of course I own a little bit of a fund. I own the shares Core MSI World Index. What is it? It's a ETF. It's pretty much mainly in the US, also in the EU and elsewhere as well. It's done great. It might do great. A lot of people own funds like this as their only investment. I would recommend against it. These are really volatile, and really big portion of them is the high value tech companies. And there's companies in there like Nvidia and Tesla with really high valuations, which can come down a lot if they don't get the revenues that people are thinking that they're gonna get. Then we can go into Nordnet. Here's some more of my investments here. These are smaller, older investments. I have DNB, a great Norwegian bank, Cibus Nordic Real Estate, which is kind of like a divestment play as well. I think it's a pretty stable stock with regular monthly dividends of around 6% a year. They own grocery store real estate in the Nordics, which I think grocery stores will do fine. In the future, people will need food always. So, and the grocery stores need to operate somewhere. So I think it's a good business in general, and kind of like the stabler one to balance out portfolio. Then I have MPC, which is not stable at all. It's a shipping company, but it's quite interesting. They have a really high dividend. They have good like PE, like all the fundamentals are good. It's quite a risky business. So we can see the PE is 3 and the dividend is 15.18% a year, which is crazy. The PB is under 1, so they have a lot of revenue, but this is the kind of business that it mightn't be as stable, and they might have high revenues now, but in the future it might change. I basically bought it for fun. I like the really high dividend. It used to be higher when I bought it. The dividend is just crazy, you know. I remember at one point it was at like 40%, which was dumb. Then I have Equinor. I don't know why I have it. It doesn't make sense to sell it. Then I have some funds. This is where my broader diversification is at. You know, I have all these funds. I have pretty much the same amount in every one of these. There's Finnish, Norwegian, Swedish funds, emerging markets, Denmark, Europe, silver, gold, a listed private equity, Japan. This is a really great fund. This is one of my favorite funds right here, Spiltan Global Fund Investment Bolag. It invests through an index into other investment companies, which basically means that the investment companies make the actual investments and it just invests in the investment company. I like the holdings of it. It's really broad diversification, but it just basically means that there's people working at these companies that make some decisions, and they can, you know, at least try to get higher returns. The returns in general are really close to the indexes, but you know, I think it just kind of gives a little bit of that downside. There's Berkshire, there's Markel, Alphabet, Constellation, Fairfax, all these, you know, classic. Then let's start babbling about what do I think will happen in 2026 for this. Of course, it's impossible to predict, but I don't know. You know, there's a lot of uncertainty. There's a lot of wars going around. Trump is moving crazy. So I think there might be some volatility that we'll see. On the other hand, there's a lot of people that are running into investments to try and get some income and, you know, trying to get ahead. You know, a lot of people nowadays a lot more people are investing because it's getting easier and easier. So that might push stock market up, but I don't know. I think in general, it will go a bit up. We might have some uncertainty. I think if Trump attacks Greenland, she might be over. I'm Finnish, and if the United States attack Denmark, if they're trying to take Greenland with military force, they're attacking Denmark. It's gonna be over. It wouldn't be good for it. First off, it would break NATO, it wouldn't be good for American companies. It wouldn't be good for European companies. It just wouldn't be good. If you think about how much sanctions Russia has from the EU, think about if they had all the same things for the US. I don't know if that's gonna happen. I don't think it's gonna happen, but if it does happen, it's gonna be bad for the stock market, really, really bad. But I think at these times, when times are so uncertain, it's best to stay cool and calm and collected, like Alexander Stubb always says, my leader. Because if you look at these, like when Trump threatens tariffs and the stock market, you know who's shorting the stock market right before it? Do you know who's buying from the bottom right there? It's Trump. It's Trump and all his friends. So if you listen to these oligarchs and make your positions and, plan your finances according to what they say or what they do, they can take your money away from you. So you should be really, really careful. For me, investing in 2026 is going to look like that I'm going to be holding a lot of the things that I already own. Because if I were to sell them, I would have to pay taxes and I would have to pay a lot of fees. There's a lot here that I could make more efficient. There's a lot here that I could sell, and there's a lot I could probably buy in the place of them. But for right now, I'm actually stacking up money and I'm trying to spend it on physical objects because those have... Really, I don't have a big consensus for 2026. It's hard to tell. With AI, what is going to happen? Well, the AI bubble has to burst at some point. I think the AI bubble is really comparable to the crypto booming bubble a couple of years ago. The price of GPUs, the price of hardware went up a lot, and there's a lot of people hyped and tried to get money by it. But at the end of the day, who really got paid and who got money was people making the computers, making the chips, making the graphics cards, and really no one else benefited that much. And I think we can see that already. Like, Nvidia is making money, Nvidia is making a lot of money, but all the other companies are losing money. Alphabet is losing money, Meta is losing money, Microsoft is losing money. They're all just spending so much money into AI, which it might at some point be helpful, but what have we seen as like consumers? Yeah, it's really easy nowadays to code with AI and it can do things like that, but in general, there's a limit to what you can do with computers and intelligence. It can do a lot, but it can't generate money, out of thin air. I think at the end of the day, most things where you add value are going to be physical. If you think about adding value to human beings, and AI at this point can do that. So for me, myself, I'm more interested in automation, robotics, things like that. But AI is cool as well. And I like to see the development of AI further. And I actually do like that it's developed, but I think the money spent on it is crazy. But yeah, that's about it. I'm just blabbering. Don't copy my stock picks. Pick your own stocks. If you have anything cool that you want to send me, some stocks or anything, give me the tips. I like them as well. Another company that I have on Trading 2.2 is Focusrite. It's cool. I have their audio interface. The stock price is really, really low. It's probably, I don't know. I bought it. I have made good returns with so far, at least really good, like 80%. That's good as well. So, but there's of course no saying that this will go up any further. But yeah, that's about it. Hopefully everything goes well. Hopefully Trump dies or something. No. Sorry, Trump, I might want to visit the US and I don't want to get killed by your federal officers. So actually, hopefully you don't die, and I love you, our eternal great leader. Bye.